Good morning. Just going to get through some news that I saw overnight and yesterday. So U.S. put on a wave of Iran sanctions, and it's hitting like 60 different entities, and there's quite a number of them in China and Asian nations that are purchasing and facilitating money flow to Iran. Uh, this could actually impact the purchases by China, even though there's going to be a meeting next month. I think it's on the 24th with President Xi, and this is going to make it a little bit uneasy, I'm sure, but we'll have to see how that all plays out. But the market is actually pricing in as if it's maybe not as substantial. Looks like there's maybe some movement in the Strait of Hormuz, but yesterday Canada slaps retaliatory tariffs on U.S. goods worth $20 billion as trade war intensifies, and so Canada announces a $7.5 billion support package, two and a half for high interest loans, and here's just maybe something just showing similar to the list of targets. Industrial goods, including iron and steel, aluminum, hand tools, and other metal products, machinery and electrical equipment, and it's perfumes, toiletries, you name it here. So, but very specific to some areas as well. This fact sheet came out from the U.S. side, and just naming off some of the facts of what are some of the irritants of the U.S. trade on this trade deal. Dairy is a big one. Just the People's Republic of China choosing retaliation over negotiation. They've named a lot of these things that are trade irritants, and I don't know why the line in the sand is for Canada to keep this up here. Anyway, this is hopefully the recording isn't going to be so echoey, but.
Canada, the OECD projects that Canada, out of 38 OECD members, will rank 38, dead last, in GDP per capita growth through 2060. And I'm trying to figure out why. I looked to see, and I did find one thing. It says here, tax and regulatory competitiveness. There's a gap even with the U.S. where we think permitting, and we've got all these problems down here. How bad is it in Canada? And what changes do you think need to be made at this point? I don't think you're really negotiating from a strong position based on these things.
Yeah, there you hear it. So this is corn, and I just pulled this off of X here. You can see which when was the last time that August was the highs in price, and it jumped all over the place with corn, but right now we're making the year highs in corn prices right now, and it doesn't happen very often. It was 11 and 12 the last time that this happened, since 2005 anyway. Quick look at the weather here, so you can see that there's going to be a system that's going to push a little bit more moisture in as we get into harvest here. You can see it here. I thought I would just put the normal soil moisture. You can see that there's some areas in Saskatchewan and Manitoba, and I'm going to say it's probably not as bad as it might show here, as we are getting a lot closer and closer to harvest, and increasing drought during harvest it just speeds up harvest for sure. Here's your soil moisture drought model, and you would say all the prairies are basically definitely the Yellowhead Corridor south kind of thing, definitely in deeper drought for sure. Just a quick look at the markets here. Canola is down 440, currently trading at 785. Rapeseed is down as well. Soybean oil is down at 66.56. Palm oil is down at 4,853 ringgit. Crude oil is down as well. So all the oil complexes are down. Diesel fuel is down. Soybeans are actually trading up. So the crush margins on soybeans are getting pressured here from where they were anyway. And some of that is that whole EPA announcement, and they just kicked the can down the road by the sounds of it. But it's the exemptions, whether they're going to sign over the same exemptions for the small refineries to include the blending. But anyway, if that were to happen, that's probably why the RINs are falling apart as well. Spring wheat is up 9 cents, so 7.29. Hard red winter is up 12, and Chicago is up 11. Milling wheat is up 3.5 in Europe, And your corn is up again at 4 cents at 5.27, and the Canadian dollar is down. Quick look at it here, you see there's still this gap yet to fill. So if there's going to be some pressure from lack of buying of soybeans and everything else, we could see some downside here. It needs to break through this channel, but it may try to fill this gap first. And the other thing to take note of is the month end, usually, Thursday, Friday kind of an area will be pressure on this market, usually downward, and yet we're down now. So here's your rapeseed, same kind of candles for the last few days, but in the gap above it here. Soybean oil looks like it could be trying to break through there. And if it does, you've got some support down here as well. And yet the soybeans are still holding up. Here's your palm oil broke down, and your crude oil is breaking down as well. Diesel fuel and your gasoline have pulled off of its highs. Canadian dollar slipping as well. It probably doesn't help that they're capturing some attention on the U.S. TV and their interviews are not going so well. U.S. dollar kind of stabilizing here, and your gold futures still looks like an upward trend, even though it's down today. Quick look at wheat here. So just where are we with corn futures? So corn, we're making some of these highs. That's taken us all the way back to 2025 on the front month, and then and if we were looking at the same front month, we're not at the same highs with the Minneapolis wheat, but Minneapolis wheat is got a little ways to go just to get to some of these previous highs. Kansas, it looks similar to the corn, where it's actually meeting those objectives, the same as the corn on the front month, and getting very close to eclipsing or getting right back to those previous highs as well. Chicago, looks like we're getting to those highs again, and then on the front month or on the December contract, getting quite close to these